GM. Today is Saturday, the 14th of September. Daily levels. First of all, apologies if the sound is a bit off. I'm in a hotel conference room and it's not exactly great. Background noise and bullshit, but it should be alright. So, we had a nice inflow day. Are the ETFs FOMOing back in after all the selling they were doing a few weeks ago? Hard to tell, but does seem to correlate with these tops and bottoms. Anyway, Bitcoin had a great close, closing back inside this value area low, closing above the 50 EMA on the daily, very important, and the bands will turn green within a few days, I would imagine. Looking at this just right above us, and I'll take off these other things here. So right above, we have from back on Thursday, 29th of August, we have a daily high, which could be a liquidity level that gets hit. If we hit that, I think we could move back towards this gap at some point. I could see consolidation going as far as there. There's also a flat daily candle here. There's a daily candle with a flat bottom, which I'll mark off there. You see there's no lower wick on it. Flat daily. Tendency is that they can, it's one sign of inefficiency, because obviously when you look at this, like here's the most recent example over here. Impulsed higher, left the flat candle, came back, went down through it. Whether it's going to come back and sweep it or go back through it, what it indicates in a very simple sense is just inefficiency. The market moved really quickly off the open. It indicates strong momentum in the near term. But you can see most of the times this happens, like over here with a very small wick, minimal wick, we moved back down, we actually swept it. Then it left another one here and it moved higher off that. And then we obviously came back down and swept that one. Especially when you're in, and obviously there's one here, which led to much more immediate continuation before eventually retracing back down. So what this means is, especially when you're in a phase of a market that is like this, where it's not trending, so it's not having a strong trend in one direction, it's not moving away to never come back, then they tend to fill. Go back and show examples of some that didn't, right? So over here, as you can see, there's a couple during February where the market never went back to those levels, right? So we've stayed above that all the way. Maybe we go back down there after, but there's also ones down here. So there's a difference. When accumulation is finished, like it was here, breaking away, you can break away without coming back. You might come back months later or years later, but in general, it can continue in that direction. Same here, moved up, ETF launch, sell off, reaccumulate, boom, away it goes. Price essentially just needed to be higher. Price was inefficient. But then you see over here, once it started getting above 50, there was a flat candle left here at 50, and that was February. I mean, it took all the way until July to touch that. So when I talk about this flat daily candle forming, it doesn't mean it has to fill right away. But if it does fill, like this one, if it fills within a few days and you go back below 57.3, which I'm actually going to put an alert on, flat candle retest. If it goes there within a few days or even a couple of weeks, that's an indication of it in and of itself that the market is still in the phase that we've been in, which is consolidation, mean reverting. Mean reverting just means that the moves that move up or down tend to reverse back to where they came from because the market's not ready to trend strong in one direction or the other. If it doesn't, if for whatever reason we see the market move higher and we start to push towards some of these higher levels, of course it still could retrace back, but it's a decent sign that we might have actually completed accumulation and be ready to go for a breakout. So how would you actually trade that? The way to look at it would be like, let's look at these two moves. Loads of gaps left behind, loads of inefficiency. So how do you know that one's different to this one, for example? Well, one of the ways is the consolidation that follows. So this one had a breakout and then that upward sloping accumulation that we talked about back at the time. And this one was you could not ask for anything better than this. Moves up, pumps through the range, no retest. So a lot of people, the reason why this gets left behind is loads of people waiting for retests. Want to retest here, want to retest there, want to buy the gaps, sweeps, whatever. Those don't tend to come. And then what happened was it broke out and you got a nice lengthy consolidation at a higher level. So if you're comparing that to now, if we did just move through the range without retesting any of those levels below, and it trended up, you'd be looking for a consolidation to form here or possibly near the highs. If it consolidates like in this area, around these levels, that's much more likely to actually go down. So if you continue to see impulse where momentum carries it higher, 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 then you can see this potential breakout. My reading of sentiment, and obviously sentiment's always a subjective thing, but from what I can see, it just seems like people are just, we're fully on the we're so back. Right? It's so over, we're so back. We're right to it, we're so back. It's all meme coin shills again. It's all fucking revising price targets. It's shitting on bears. I've seen this. I've seen someone posted bearish altcoin chart on Twitter, and people are quote tweeting it. So they posted a bearish chart, whatever, like a few days ago, and people are quote tweeting it saying, you're a fucking retard bear, all this kind of stuff. So, influencers shitting on other influencers for being bearish, but then the other ones being bullish, and then nobody shits on the bull for being bullish for the last 6 months and being wrong. But as soon as a bear posts something and the market goes up 3%, they get shit on. So again, that's not like a reason to trade or not trade. These are just subjective sentiment things, and it wouldn't particularly concern me or put me off. I think Bitcoin can absolutely go higher, right? There is nothing to stop Bitcoin going here. There's nothing to stop Bitcoin going there. Even if the market's bearish, they can go to those levels. So this whole thing of, as we've seen on the way up, where it hit here and it hit here and it hit here and it hit here especially, a lot of what you see in this area is actually just the bears fighting this. It's just the PTSD of the last 6 months. They're like, this rally must fail too. This rally must fail too. So a combination of disbelief and bad positioning can get you to where we are. It's breaking structure on the low. So your earliest indications, there's a daily high that led to the lows. We've broken above that, cleanly and held. Like I said, the 50 EMA, like I said, the bands are about to cross. We're back inside the value area low. So, simple sense, value area low to value area high is a good trade. We might see that. Is it going to be fast? Or is it going to be slow and grinding? Don't know. But certainly, looking higher makes sense. As for today, I don't expect much. It's Saturday. Today I'll do the weekend workshop. I'm going to do that at 1 p.m. UTC. Is that right? I'm trying to get my timings right. Because I'm traveling today, I have to do it earlier. And it's all about building systems. So I'm going to literally give you systems. I'm going to hand them to you on a platter, which you can take and you can steal from me. But I'm also going to teach you how to make systems, think of ideas, creative ideas, of how to put rules together for systems that look at the market in a unique way. Very well requested topic, so that's going to be a banger. So I will do that at 1 p.m. UTC. Yes, 1 p.m. Is that good? Is that right? Should I do it then? Yes. 1 p.m. UTC. Let's go. What else? That's about it. That's everything else. So how did stocks close yesterday? Closed another green day, up in towards the highs. Nasdaq, same but slightly weaker. Just had a little bit a stronger sell-off and a lower bounce than the S&P. Dollar closed the week bearish, definitely. After breaking down to the lows, it's now going into sort of a pennant formation. So that would indicate if it breaks the downside, it's going to go lower. Of course, it could still just consolidate and chop around for a while. But certainly bearish leaning. And gold is the big winner. Gold is just flying. Gold's on a one-way path to high 2000s and has been, it has been all year. It has been ever since this breakout. When you have basically a 4-year, right, 3.5 year, amazing consolidation at the highs, especially with a compression towards the end, and then a breakout, that breakout doesn't just finish, right? So best chance to get on board if you're a gold bug was there. And anywhere in here, this is just all going to be grinding higher. This is big move, big accumulation. Gold's being accumulated by, central banks and governments and all that. And when you zoom all the way out, like, it's just an incredible chart. And gold cucked people for so many years that if you're not a gold trader, you might think this is like super easy. And I don't trade gold, but I always keep an eye on it. There was gold was a meme. Like from 2013 to 2019, gold was a meme. Gold did not move for 6 years. So you have to remember, people who've traded for 5, 10, 20 years, like if you were a gold trader for those 6 years, you're literally trading the worst market on earth, because you're trading gold at a time that stocks are doing this, right? So in the same time frame, the S&P was doing this 2013 to 2019, which is 2013 to 19 there. That's the S&P 500 in the same time frame, while gold is just Cuck City. So the fact that gold is now just having this, what looks like, oh my God, this is such an easy, smooth, clean trend. You also have to understand it was 6 years of being a cock, a small rally into COVID, or a decent rally, and then three and a half more years of being a cock, and now it's breaking out. So probably got plenty more room to run, but gold's a good hold. Probably a vision of the future, by the way, for Bitcoin. It's going to be an asset that, so I guess this is, I'll do this bit and then I'll finish. This is quite a good way to view it, in my opinion. Gold is like 1,000-year play, right? And the people who are battling to accumulate or distribute, but definitely accumulate gold, are trying to secure themselves. They're trying to accumulate scarce assets. They're trying to protect themselves from, monetary debasement and global geopolitical conflict, blah, blah, blah. Short answer, they have patience, right? The reason why gold cucks everyone for 6 years in a range like that is because it doesn't need to go anywhere. It's going to go up to the right forever, right? As long as gold remains scarce, until we start finding gold on asteroids and mining it, and then gold price just plummets. Until then, it's going to keep going up. And if you think that Bitcoin is going to have a similar place, but for the digital age, it's going to be the same thing. Not this, we're still in a very volatile phase, so it's good, and you can still trade it, and there's big trends, but there will come times where Bitcoin has like 5 years of just doing nothing. And the first time that happens is going to really crush many crypto traders, because you're just so used to the volatility. There's nothing worse than a volatility compression. It doesn't, if gold went like this, like every gold trader on the planet would have been just over the moon if gold went like that. That's like what Bitcoin does, right? And that's what people expect Bitcoin to do again. It's like, oh, when the top's in, it goes all the way down, then it accumulates, then it's all the way up. Instead, what actually happens is it doesn't go all the way down because there's actual genuine underlying demand, and then it goes up, but it doesn't go all the way up, and then it consolidates, and then it breaks out. This is a vision of what Bitcoin's going to be, in my opinion. It's not going to look like this, but this kind of behavior. And what else? I want to check total 3 versus Bitcoin, see what's going on here. Just to look at the relative, I'm going to a 4-hour chart and look at the relative charts to see how they're looking. There's total 3, there's BTC, Bitcoin up, consolidate, bigger breakout on Bitcoin. Yeah, Bitcoin's leading, so that's all good. That's it. GM. See you on the live stream at, what fucking time? 1? Live stream at 1 UTC. And that's it. GM.